Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, gold settled at 1925 and on Friday we did not get to see any particular direction on the chart of gold. If you look at the chart of gold, then you will see that market is choppy, market is in indecision mode right now. So let's look at the market for the coming week. Dollar supported by a hawkish Fed. Hawkish comments Friday from several policymakers gave the dollar a boost. Also, Friday's better than expected US manufacturing PMI news was bullish for the dollar. The dollar was undercut Friday by stock market gains, which reduced liquidity demand for the dollar. So this is the chart of dollar US dollar index DXY, and more or less the correlation between dollar and gold is back again. So there was a kind of a divorce, there was a kind of a breakup for the last couple of days, but we can see that more or less they are responding again. So dollar index closed at 105.58. So fundamentally there is no doubt that DXY is an uptrend, and technically also we can see the market is still in uptrend. But if we observe the present structure of DXY here, then we can see the DXY is losing momentum. So fundamentally bullish, technically bullish, but if we observe the present structure, do we see a bullish market? Obviously no. We can see the market is losing momentum, market looks tired. Okay, and if you look at the higher time frame also, you will see a similar picture. But the problem is that without any fundamental factor, we will not get to see a complete trend reversal on the chart of DXY, or not on other charts as well. So fundamental factors are very important. And if we don't have the backing of a fundamental factor to push dollar towards the downside, we will get to see a sideways market. So there's a high chance that DXY may remain sideways or choppy for the next 1 or 2 days. Because my dear friends, if we look at the chart of DXY, then yes, there is no doubt that DXY is an uptrend, but right now slowly it is losing momentum. If DXY really needs to continue the upside, it will have to cross 106 level. If DXY crosses 106 level, then only we will get the confirmation that yes, buyers are back again and we can plan our trades accordingly. But as of now, this seems to be the range of DXY. What is the range? 106 on the upside and 104.60 or 104 on the downside. This is the range of DXY, and DXY really needs to come out of the range to give us some good moves. Now let's look at the chart of gold. So as I said, the gold looks indecisive on Friday. Okay, and we can see that market forms series of dojis and spinning tops. Dojis and spinning tops signify indecision in the market. So my dear friends, if you're holding any buy or sell position, you can be on the trade, okay, and try to exit when your loss is recovered, or try to close your positions when your loss is minimized. Okay, because the range of gold is right now 1950 to 1900. This is the range of gold right now, and if market doesn't get any particular direction, then gold will remain in this range only. It's a range of 500 pips. 500 pips is also not a matter of joke, but yes, you need to protect your capital, so do not gamble. And especially traders who trade without stop loss, never forget, trading without stop loss is like a suicide. Don't make the mistake. Okay, so the volatility of the market will be very important on Monday. So right after the market opening, observe the size of the candle, because Forex is a decentralized market, not like stock market or other market. So to understand the volatility, okay, you need to check the size of the candle. Yeah. So if you see the market is not very volatile, market doesn't have much volume, or market acts like a typical Monday market, okay, in that case you can expect market to take support around 1922. 1922 will be your first trading opportunity. If you see the market is going down with very less volume, you can expect a buy position. How much you can expect? Do not expect much. Max to max 20 to 30 pips. 30 pips is decent enough. Hardly there is a possibility of getting 40 pips around 1922 level because 1922 is a very weak level. We have many levels in the market, but every level strength is different. 1922 is a weak level, so if the market is low volatile, you can expect 1922 to work. The second level will be or the second support will be around 1915 level. Okay, 1915 to 1916. This is the second support on the chart of gold. In case you see that on Monday market is going down, market breaks 1922 level. If you see that selling pressure is high enough, you can also look for a selling opportunity as well. You can look for a quick selling opportunity of 40 pips. Buy 40 pips. I'm your 40 pips next door. Okay, you can look for a quick sell around for 40 pips below 1922 level if you see that selling pressure is high. Okay, and your next support will be around 1915 to 1916. Keep in mind 1915 to 1916 is also not a very strong support, but at least we can expect a bounce. Trend reversal and bounce or retracement are different things. Okay, so if market comes down to 1950 1916 level, obviously you need to exit from sell position and you can expect a bounce. If you are a daredevil kind of a trader, if you are a risk taker, then you can also look for a buy position around 1950 1916 level. 1911 seems to be a better level in comparison to 1916 because FIBO 78.6% retracement level, previous resistance will also be acting as support around this area. So around 1911 level also we have a support. If market bounces, we can go for a buy. So on the chart of gold we have 4 supports. Okay, how many supports we have? We have 4 supports right now. The first support is around 1922, which is a weak level. So if the market is low volatile, then only you can expect the level to work, especially on Asian and European session, not only in US session. Then we have support around 1915 to 1916. It's a medium level. Okay, you can expect the market to work if the volatility of the market is not very high. Then we have 1911. It's a more or less a good level. And then we have 1900 to 1903 that we have been discussing for the last couple of days. 1900 is a round number. And in our previous videos also we have seen that around at 1900 level we have a good number of contracts lying around. So this month 1900 is the monthly support, you can say. Okay, so I don't think so market will go below 1900 in the next 1 or 2 days. So these are the support levels where you can expect market to take support, but keep in mind volatility of the market will play a very important role. So once you will see the market has entered the zone, observe the volatility of the market, simply switch to 15 minutes time frame. Okay, 15 minutes time frame to observe the market behavior. If you see the market is taking support, then only click on the buy button. Do not gamble with your capital. Not all levels are permanent. Actually, not all, no level is permanent in the market. Okay, we are traders, not gamblers. Don't forget that. On the other hand, if you see market going up, again volatility will be very, very important. So especially during the Asian session, European session, if market goes up, then there's a chance that market will face some resistance around this area again. Which area? 1929 to 1931. Market has already tested the level many times. This level is not very strong. Okay, market has tested it many times, but still we are expecting that we may get to see a quick selling opportunity, because see, whenever there is low volatility in the market, there is low volume in the market, market cannot go for a breakout, because for a breakout volume is extremely important. It's just like let's say you want to break a door. Okay, let's say there is a door and you want to break it. Okay, so to break the door you need strength, isn't it? Let's say you don't have strength, then will you be able to break the door? Let's say a kid of 5 years, 6 years, will he be able to break the door? Obviously no, because he doesn't have the strength. Similarly in here also, to break a certain any level, strength is very, very important. Strength means volume. Okay, so if market doesn't have volume, then obviously it won't be able to break. And usually during the first half of Monday, there is not much volume and we can expect a reversal. And then the next resistance is around 1935 level. Around 1935, it can be 1934.5, 1936. So once market will be around 1934 level, switch to 15 minutes time frame. If market reverses, if you see price rejection from above, you can look for a sell as well. And as I said, 1950 is the range. Yes, 1950, 1952 is the ultimate resistance, and I don't think so market will go towards 1950, 52 during the first half. Let's see how the market opens. Market opening will be very, very important, and especially the volatility of the market. So that's all from my side, my dear friends. This is my analysis. Please do your own analysis, because if you want to become an independent trader, then yes, your analysis, your point of view is very, very important. Enjoy the day, have fun, and enjoy the weekend. Give time to your friends and family. Bye bye, take care. See ya on Monday. Bye bye.